Hey everyone, and welcome back to Talk Tickers. Today we are buckling up for a deep dive into Otis Worldwide's latest earnings call.
Yeah.
They just wrapped up Q4 of 2024.
Yep.
And we're here to break it all down for you.
Absolutely.
So before we get into the nitty-gritty, let's set the stage for our listeners.
Okay.
Give them a quick overview of the results. What were some of the big headlines?
Well, Otis reported net sales of $3.7 billion for Q4, with what they call organic sales, up nearly 2%.
Okay.
Now, organic sales exclude the impact of currency fluctuations and acquisitions, so it gives you a clearer picture of how the core business is performing.
Got it. So focusing on that core business growth.
Yeah.
What drove that 2% uptick?
It seems like their service segment was the real star here, with organic sales jumping by almost 8%.
Wow.
This highlights their strategic move towards a service-driven model, focusing on maintaining and modernizing existing elevators and escalators.
Gotcha.
Rather than just selling new ones.
So it sounds like they're not just relying on new construction projects to drive that growth.
Exactly. They're tapping into the massive installed base of Otis equipment already out there.
Yeah.
Especially in a market like China where they've had a strong presence for years.
Okay, that makes sense.
Mm-hmm.
Now let's talk money.
Okay.
How did those sales numbers translate to profits?
Well, their service operating profit, meaning the profit specifically from their service operations, surged by, I think it was a cool $54 million.
Okay.
And even more impressive, their service operating profit margin expanded by 0.5 percentage point to 24.5% in the quarter.
Hold on. Break that down for me a little bit.
Sure.
What does that margin percentage actually tell us?
Well, it means that for every dollar they earned from their service business, they kept almost 25 cents as profit.
Okay.
That's significant because it shows the service side of their business is not only growing, but becoming increasingly profitable.
So they're really proving that focusing on service can be a smart financial move.
Absolutely. And this isn't just a one-quarter thing.
Right.
For the full year, their service operating profit margin hit 24.6%.
Okay.
This suggests that it's a sustainable trend, not just a temporary blip.
So it sounds like Otis is really walking the walk when it comes to this whole service-driven model.
Yeah.
They're not just talking about it, they're actually seeing real results.
Right. And this shift is reflected in their maintenance portfolio.
Okay.
Think of this as their collection of all the service contracts they hold.
Uh-huh.
This portfolio grew by over 4% for the third year in a row.
Wow.
Bringing the total to a whopping 2.4 million units under their care.
That is a lot of elevators and escalators to keep running smoothly.
Yeah.
How are they managing to maintain such a large and growing portfolio?
Well, one key area is modernization.
Okay.
They're not just keeping things running, they're upgrading and improving existing systems.
Right.
In fact, their modernization orders grew by a very healthy 18% in the quarter.
So they're essentially breathing new life into old elevators and escalators.
Precisely this strategy allows them to tap into a whole new revenue stream, especially as buildings age and require updates to meet safety standards and efficiency demands.
This all sounds very promising.
Yeah.
But what about the future?
Sure.
Did Otis give any indication of where they see things heading?
They did.
Okay.
For 2025, they're forecasting net sales between $14.1 billion and $14.4 billion.
Okay.
This implies a potential growth of 2% to 4% in what they call organic sales. Remember, that excludes currency effects and acquisitions.
Right. Okay, so continued steady growth overall.
Yeah.
What about profitability?
Well, they project their adjusted earnings per share, or EPS, to fall between $4 and $4.10.
Okay.
This is a key metric that investors use to gauge a company's profitability.
All right, so they're expecting to keep those profits rolling in.
It seems so.
Now, let's zoom in on China for a bit.
Okay.
We know that's a huge market for Otis.
Yeah, it is.
But we've also heard that China's construction boom is cooling down.
Right.
How is Otis addressing this shift?
That's a great question. They're actually undergoing a pretty significant transformation of their Chinese operations.
Okay.
Their goal is to sharpen their focus on service and modernization in this market.
So they're adapting their strategy to the changing reality on the ground.
Exactly. Instead of primarily targeting new equipment sales, they're doubling down on making the most of the equipment they've already installed.
So what specific actions are they taking to make this happen?
Well, they're consolidating some operations,
Okay.
streamlining their product offerings, and investing heavily in their service capabilities.
Got it.
Think about it. Training more technicians, developing new modernization packages, and generally enhancing their ability to service the existing Otis equipment in China.
So it's a pretty comprehensive overhaul aimed at maximizing their position in the Chinese market.
Right, and they're even projecting a low teens annual growth rate for their service portfolio in China. With a strong emphasis on quality and margin expansion, they see this as a long-term play, recognizing that even with slower new construction, the demand for maintenance and modernization will only grow.
This is all starting to sound a lot like that Uplift program we've been hearing about.
Yeah.
The one focused on operational efficiency, right?
Exactly. It's all connected. In 2024, they already achieved $70 million in savings through Uplift.
Wow.
And they're aiming even higher, targeting an annual savings run rate of $200 million by the second half of 2025.
That's a significant chunk of change.
It is.
Clearly, they're serious about streamlining their operations. So we've got a company that's adapting to a changing market.
Yep.
Doubling down on service and driving efficiency. It's a lot to take in.
It is, and we've only just scratched the surface. We'll dive deeper into some of the key takeaways from this earnings call in the next part of our deep dive.
Okay.
We'll analyze what these moves mean for Otis's future and explore some of the potential risks and opportunities they face.
Stay tuned for that, folks. This is Talk Tickers, and we're your guides to understanding the world of earnings calls. We'll be right back. After a quick break. Welcome back to Talk Tickers, everyone. We're still digging into Otis Worldwide's Q4 2024 earnings call.
Yep.
Before the break, we laid out some of their key financials and strategic moves.
Right.
Like that big emphasis on service and modernization.
Mm-hmm.
And what stands out to me is how they're not just reacting to a slowdown in new construction, particularly in China.
Right.
They're proactively turning it into an advantage.
Yeah.
Okay, so explain that a bit more.
Sure.
What makes this an advantage rather than just, making the best of a bad situation?
Well, it's all about the nature of the service business.
Okay.
It tends to be more stable and predictable than relying solely on new equipment sales.
Right.
Which can fluctuate a lot depending on the economy.
So it's like building a steady base of recurring revenue.
Exactly.
Kind of like a subscription model almost.
That's a great analogy. And recurring revenue is very appealing to investors.
Right.
It makes a company's future earnings more predictable, which usually translates to a higher valuation.
So by shifting their focus to service, Otis could actually become even more attractive to investors.
Yeah.
Even if new equipment sales aren't booming.
Precisely. But let's not get ahead of ourselves.
Right.
There are potential downsides to consider too.
Okay, yeah. No business is perfect.
Okay.
What are some of the challenges they might run into with this approach?
Competition is a big one.
Okay.
We've talked about how they're aiming to dominate the modernization market, particularly in China.
Right.
But they're not the only players in the game.
So who else are they up against?
Well, they've mentioned some potential competition from other large elevator and escalator manufacturers.
Okay.
Those who also have a big installed base of equipment that will need modernization.
That makes sense. But what about smaller, independent service providers? Could those pose a threat?
Well, Otis actually addressed that in their call. They haven't seen independent providers making big inroads into the modernization market yet.
Okay.
But that could change. Smaller companies can sometimes be more agile and offer competitive pricing.
So it's a potential risk they'll need to keep an eye on.
Right.
Did they say anything about how they plan to stay ahead of the competition?
They emphasized their deep understanding of the Chinese market.
Okay.
Their strong customer relationships. And their ability to offer comprehensive modernization solutions.
Okay.
They're not just swapping out old parts.
Right.
They're upgrading entire systems with the latest technology.
So they're banking on a combination of expertise and scale to maintain their edge.
That's right. But it's not all smooth sailing.
Oh.
They also talked about some challenges they're facing even within their service operations.
Like what?
Well, remember how they've been aggressively hiring new field mechanics to support their service expansion?
Yeah, they added something like 2,000 new technicians in 2024.
Exactly. And while that investment is crucial for their long-term growth,
it did put a bit of a dent in their service margins in Q4.
Why is that?
Well, think about it. Bringing on that many new employees always comes with a ramp-up period.
Right.
Training takes time, and new technicians might not be as efficient as seasoned pros right away.
So it's a short-term cost they're incurring to build long-term capacity.
Precisely. Otis seems confident that this is a temporary issue.
Okay.
And that these new hires will ultimately boost their efficiency and profitability. It's like any investment, sometimes you have to weather a bit of a dip before you see the payoff.
Makes sense. Now, another thing that caught my attention was their comment about the retention rate in their service portfolio.
Yeah.
Didn't that slip a little in 2024?
Yes. But they explain that they're focusing on building a higher quality portfolio.
Okay.
This means they're being more selective about the service contracts they take on, even if it means letting go of some less profitable ones.
So it's a trade-off between quantity and quality.
Right. They're prioritizing the contracts that are most likely to generate strong, consistent profits over the long term.
Exactly. It's a disciplined approach, and it shows that they're not just chasing growth for growth's sake.
Right.
They're focused on building a sustainable, profitable business, which again is what long-term investors like to see.
You know, this whole conversation keeps circling back to that broader trend we talked about earlier, this shift from selling products to selling services.
It's fascinating to see how this is playing out across so many industries.
Yeah.
Companies are recognizing the value of building those long-term relationships with customers. There's
Right.
ongoing revenue streams.
We've already seen it with software,
Yeah.
at music, even cars to some extent.
Right.
But it's intriguing to see a company like Otis,
Yeah.
with its roots in industrial manufacturing, embracing this model so wholeheartedly.
It challenges the traditional assumptions about how certain industries operate. Who would have thought a century ago that an elevator company would be talking about recurring revenue and customer lifetime value?
It's a reminder that even established industries can evolve and adapt in surprising ways.
Absolutely.
And for investors, it highlights the importance of looking beyond traditional metrics.
Mm-hmm.
Sales growth is still important.
Yeah.
But it's not the whole story anymore.
Right. You have to consider the quality of that growth, the sustainability of the business model, and the long-term value being created.
Exactly.
Otis is giving us a great case study in how a company can transform itself to thrive in a changing world.
And we're not done yet. When we come back, we'll get into the fun part, the This Is Not Financial Advices segment.
Okay.
We'll brainstorm some wild, out-of-the-box ideas inspired by Otis's strategic moves.
Sounds good.
Stick with us, folks. We'll be right back on Talk Tickers. All right, Talk Ticker listeners, it's time for the moment you've all been waiting for.
Uh-huh.
This is not financial advice where we let our imaginations run wild and toss around some purely speculative trade ideas.
Remember, this is all hypothetical, folks.
Exactly.
We're just having some fun and exploring the possibilities. Don't base any investment decisions on our wild brainstorming session.
Exactly. So with that disclaimer out of the way,
Yeah.
let's get those creative juices flowing. We've talked a lot about Otis's push into modernization and service, especially in urban environments.
Yeah.
What if they take that a step further
Okay.
and dive headfirst into the whole smart city trend?
Now, there's an interesting thought. They're already laying the groundwork with their digitally connected elevator platforms. Imagine if they partner with urban planners and developers to integrate their technology into the very fabric of smart cities.
Right. Their elevators wouldn't just be moving people up and down within buildings. They'd be part of a larger interconnected urban ecosystem.
Think about the possibilities. Their systems could be linked to public transportation networks, optimizing traffic flow, and minimizing those frustrating wait times we all experience rush hour in a smart city with Otis on board. Maybe it wouldn't be so bad after all.
And it's not just about efficiency. Imagine elevators with sensors that can detect potential hazards or even medical emergencies. They could automatically alert first responders and provide real-time information to help people get the assistance they need faster.
They could even develop personalized transportation solutions for people with disabilities, making it easier and more convenient for them to navigate the city.
It's all about leveraging technology to create a more inclusive, accessible, and efficient urban experience for everyone.
And Otis, with its global reach and expertise in vertical transportation, could be a key player in making this vision a reality.
Okay, I'm getting really excited about this idea now, but let's crank it up another notch. What if Otis partners with a ride-sharing company like Uber or Lyft?
Now you're talking. Imagine requesting a ride, and the app not only directs your driver to your location, but also preemptively reserves an elevator for you, whisking you away as soon as you step outside.
No more awkwardly waiting in the lobby for an elevator while your driver circles the block. Talk about a seamless and efficient transportation experience.
It would completely revolutionize urban mobility, creating a truly integrated and efficient system. And for Otis, it would open up a massive new market, expanding their reach beyond traditional buildings and into the realm of personal transportation.
Whoa, that's a big one. It's amazing to think that an elevator company could potentially become a major force in the ride-sharing industry.
It just goes to show that sometimes the most innovative ideas come from unexpected partnerships and cross-industry collaborations. It's about thinking beyond traditional boundaries and reimagining what's possible.
Okay, so we've gone from smart cities to ride-sharing partnerships. I think it's safe to say we've achieved outrageous but plausible status with these ideas. But remember, folks, this is not financial advice.
Right.
It's all purely hypothetical and just a bit of fun to spark some creative thinking.
Right, and that's what Talk Tickers is all about. We want to help you understand the companies and industries that are shaping our world and encourage you to think critically about the trends that are driving change.
So there you have it, folks. We've gone deep on Otis Worldwide's latest earnings call, exploring their strategic moves, their challenges, and even some wild speculative scenarios. We hope you found this deep dive insightful, maybe even a little bit inspiring.
And as always, remember to do your own research consult with a financial advisor and make informed investment decisions that align with your own goals and risk tolerance. Until next time, keep learning, keep exploring, and happy investing.